Good morning, everyone, and welcome to the European crossover webinar. And we are seeing equities a bit higher here, as you may see here. I'm actually got the euro futures here, as well as the cable futures here. Um, oh, well, here on the CME, the euro versus dollar. Not they don't have the cross rates, but like I said, have the so this might help us a little bit more. Also, basically, I'm going to be employing the same thing that I do when I'm you know. Trading or scalping the cable. You can see here on the 1 minute chart here, probably might be a little bit too short of frame. I don't doubt that, but you can see here when we made this run up here in the euro and had this little gravestone doji. You can see we had a pretty good little push up here in volume, and the same thing on the rebound here. Now we haven't fallen a whole lot, but from that area we've fallen 15 pips, or in this case with the futures contract, 15 ticks. But once again, like I said, give an opportunity to go in and look at that on a closer look here. You can see here we're still below that downtrend line here in the euro on the 30 minute. Looking here in the 30 minutes. So basically going to go in and have the same setup, even though we do look at it on the trading view. But I think it might help when we're looking. You can see here with the cable. We're still holding down here on the 2 hour chart here with the cable. We already had a pretty good fall here, and actually using the same thing with using the VWAP and 2 day VWAP, and I also use the anchor VWAP. So this is where we are from the highs. If we were to pull this back here on the cable, you can see here from the very high move up in here, or the VWAP, volume weighted average price, is here. So obviously a run back in here would be looking for some resistance. Doesn't work like a moving average. It's basically a weighted average as to price for as the amount of volume, as to price gives you a more fair factor, if you want to think of it that way. I've used it quite a bit with the SPOOs, which has really helped quite a bit. You can see here, not only we moved higher with 2 day VWAP and same day VWAP. Certainly the doors open. We have options expiring today in the futures, so that's why I was talking about yesterday afternoon. I do think that we're going to end up pushing higher before we potentially can go lower. I think we'll eventually go lower, but that is what I said was that is a risk that will move higher. Certainly, that's what we're doing right now at this time. And you can see here how they defended and held 2 day VWAP, which actually opens the door for them to push higher. And certainly higher is what they've gone and pushed here. We can take a look here a little bit longer here on the SPOOs on the 2 hour. Certainly was still, and the door was open, even though we did see a pull down yesterday afternoon, a little bit, not a whole lot, but about I think about 12 handles or something like that. I looked on the 30 minute, and nothing had been validated or invalidated at the time, so the door was still open for them to move higher. And I didn't see anything technically that I could say, basically, don't like to say just the algos, but basically just a little bit of moving around, and it paired back. You can see here, but there was nothing to suggest. We were still in a buy mode here. There was nothing to suggest that it could break a whole lot lower. And you can see here we returned back, and then since then in Asia, we've done nothing but move higher. And we actually did come up here, although I wasn't awake. I would like to grab down the short, but you can see that 31.23, the significance, and then we kind of dip back. I made it up to, I think it looks like 31.25, and then we dip back about 10 handles, or a little bit more than that, almost 15. And then now we are pushing a little bit higher, but you can see that's still in the buy mode. So basically applying the same things I have, but going to be applying that, like I said, with the euro and the cable here, just for opportunities, but basically the same particular setup that we have here. But as I mentioned, we do have options expiration here, and coming up in this morning, that actually goes off the board at 11:59 Eastern. 11:59 Eastern. I still have the Dow futures and NASDAQ, but as I told you before, my concentration is just going to be just keeping it simple, stay with the SPOOs. It makes it much easier, especially when I'm looking at this I can see moves. I was talking this in the chat room. I can see moves develop far easier, just like yesterday when we broke lower. There may have been a time where, not that long ago, I may have chased something like that, and then I'd be stuck short, and here came the market right back. But I could see once again when I looked, as this thing broke lower, it didn't even break low, but it rolled lower. Basically, we're trading around 31.05, and all they did was have someone push it down to 31. Once it got to 31, stops took over, and then they pushed us down. But when I looked at it on the 30-minute, there was nothing that was being validated. It was still technically in a buy mode. You can see that. So I was like, I'm not going to touch it. And they gently came back, and you can see they didn't move a whole lot, but they maintained that upside, and kind of corresponded to what I was thinking was, hey, look, the risk with these options expiring, a ton as far as value expiring today. Hey, the risk is it will continue the upside move, and certainly we've seen just that. So that's what kind of helps me kind of looking across the board on one screen, being able to see, okay, am I seeing something developing before it gets there? What are the key levels? Okay, it looks like we're breaking here on the 5-minute, but where are we with right now on a key level? That has been the 31.23 on the 30-minute. And once again, you can see here we're trading very, very low volume. We did see a move up in here, but once again, just like I referenced with the euro, you can see here we make this move, we see this big jump in volume, and that's what I'm looking for, is for clues. And you can see here, then we have this, we can see it right here, this gravestone doji, you see? So corresponding high in volume, they goosed them, and they stopped a few people out. We get a good high in volume, we get a gravestone doji. Hey, you got a nice setup for a pullback. You see what I'm saying? So much easier to go and see that. Of course, we came down here, we pushed up above. This is same day VWAP, but basically applying. I used to scalp the euro a lot when we had more volume. We are seeing that return back, so I'm thinking, it makes sense. You can have that available here with the euro, and the K will be able to go in and move in and out of those, especially as economic reports come out. So that's where we stand right here. You can see volume obviously very, very low. Looking here at the euro, as I mentioned on the 2-hour. Once again, these are the futures. Right now, the euro is trading at 12.10 or 12.11. So you can see right now, there's not that much of a difference here. I've got 12.31, so about a 20 handle difference, or 20 tick difference, 20 pip difference. So you just look at that and just make a difference of that if you're looking at the cash. But it sort of makes it a little bit easier to go in and take a look at this point. As far as day trading opportunities, either to use the futures or just apply it directly to the futures, and I mean to the cash. But anyway, with that being said, we'll go on and take a look at the upcoming data, which I think is practically nil. Okay, you can see here, we did come up with the Eurozone current account. Not very much of a market mover whatsoever, but we do have retail sales at 8:30 Eastern, Canadian retail sales, and that's going to be it as far as data for today. Just Canadian retail sales at 8:30 Eastern. So let's take a look at the news. We don't cover the Canadian dollar much as far as the news flow, so we'll just go and hit on this. This is from yesterday afternoon. Canadian dollar falls as shutdowns leave scar on economic data. The Canadian dollar weakened against its U.S. counterpart on Thursday as investors worried about the rising coronavirus cases, and domestic data showed a record plunge in wholesale trade, but the currency stuck to its recent trading range. The loonie hasn't faded as much as commodity cousins AUD and Kiwi, said Greg Anderson, global head of foreign strategy at MBO. Canadian wholesale trade fell 21.6% in April from March, weighed by shutdowns related to the virus. Separate data from payroll services ADP showed that Canada added 208,000 jobs in May, when lockdowns helped contain the pandemic began to ease. Bank of Canada sees the Canadian economy facing a prolonged and uneven recuperation period, with households remaining cautious with their spending until there's a coronavirus vaccine. Global stocks fell as an increase in new coronavirus cases in some U.S. states and China crushed hopes of a swift world economic comeback from the pandemic. So the dollar ekes out a weekly gain as infections sap confidence. The dollar headed for its best week in a month on Friday as resurgence in coronavirus cases knocked confidence in a rapid economic recovery and drove investors to the safety of the world's reserve currency. Geopolitical tensions on the Korean Peninsula, in the Himalayas, and between China and its trading partners have also dented the mood, and the balance of the risk keeps moves modest in Asia. The dollar traded near a two-week high against a basket of currencies. The strength and the drivers behind it has stalled a rally in the risk-sensitive Aussie and Kiwi, which have both spent the week range-bound. Bulls need new news and inspiration to push prices higher. That inspiration isn't readily available, said Chris Weston. Trump on Thursday renewed his threat to cut ties with China a day after the first high-level talks between the countries in months and souring relations. The meeting between top diplomats in Hawaii was inconclusive. The U.S. senior U.S. participant said China had committed to sticking with the trade deal the two parties signed in January. Also in focus for markets was an uptick in coronavirus cases in many U.S. states this week, along with the rising hospitalizations, reflecting a troubling national trend that has daily infection numbers climbing after more than a month of declines. More than 150 new cases have also been detected in Beijing since last week. Unnerving investors worry about a return of global lockdowns as it prompted a lift in the city's alert level and a reintroduction of travel curbs. The Aussie, which has rocketed almost 25% for the March lows, has turned more sedate over recent sessions and has only made marginal gains on Friday, rising to 68.61 despite a record surge in retail sales. The Kiwi slipped to 64.07 and slowest since Monday. The state of play could potentially extend into an early part of next week as markets continue to reassess the risk of a second COVID-19 infection and versus progress on the vaccine development. Elsewhere, the pound sat in a fraction above a two-week low at 24.32. The market attention now turns to the European Union beginning at 8 GMT, where bloc leaders are now trying to navigate regional divisions to deliver a $750 billion euro coronavirus, or 750 billion euro coronavirus recovery finance at the dollar. The euro, which has steadied at 12.12 in Asian trade, has lost about 1.3% of its original value against the dollar since Tuesday. Any sense of disappointment on the virus recovery plan should see the pair breach 112 convincingly and open a path towards 1050, said Terrence Wu. All bearish bets will be of its cohesion is shown over the virus recovery front. Investors are keeping a wary eye of the Aussie trade ties as relations with its biggest trading partner, China, are handling of the coronavirus outbreak. A sophisticated state-based actor has been attempting has been attempting to hack a wide range of Australian organizations for months and has stepped up its efforts recently, said Prime Minister Scott Morrison. Yeah, I saw that on Twitter. Not Twitter, I think it was it was on Twitter, and then I think I saw it in Live Squawk. But I saw on Twitter early in Asia, they were saying they were under attack. That's what I was saying. Reuters reported Canberra had determined in March last year that China was responsible for hacking attack on Australia's parliament. Australia never publicly identified that source of the attack, and China denied it was responsible. And lastly, once again, just trying to touch for some flavor for today. We know we have a lot of options, a ton of options as far as value expiring in futures. Stocks wobble as investors assess a second wave. Asian U.S. stocks futures teetered in choppy trade. We'll keep it short. On the whole, markets have been sideswiped this week with the contagion concerns. All three major stock indices were range bound. Markets looking for its next big impulse. There's a lot of impulses in the market for investors to weigh. Cleveland Reserve President Loretta Meister said it took a year or two for the U.S. economy to return to pre-pandemic levels. And let's see here. The pound mired near a two-week low at 24.03 due to concerns that the Bank of England's bond purchases may not be enough to support an economic revival. So let's go and move into the analysis. Mark says, good morning, Polly. A newbie question. What is the significance of options expiring? Does the market go up or down? Any reason why you don't use the EMA and 927 on the 30 minutes? Is this a good indicator why you don't use? Well, I actually do use. Thank you for the question. Maybe you're asking why. I do use, you can see right here, I use a 9 and the 27 exponential moving average. And I've just found that those seem to just work for me. I mean, I've used those over the years, and I've just stuck with it. I've even used it before in a 2-hour. I just don't trade that longer term, but I use it as a, you can see here with the cable, you can see here with with the euro, and you can see here with the cable. And it's for me, it has seemed to work very well. You can see here, I mean, anytime you can see a big trend, you're going to say, oh, well, yeah, but I've seen it's worked very well as far as you can see here, riding the market. And really, I just use it to, as I told you yesterday, a good example, because you can see here, when you get in a real choppy thing, you're going to get a lot of mixed signals. You have to figure that. Where you're looking for some confirmation or potentially divergence is when you get a market move and then you see a retrace back. And one of the ways that I like to use things is when, like, let's say in this big move here, you've been on a down, it's been on a sell mode. Okay, fine. We flip to buy, and if you quickly flip to a sell again, or vice versa, you usually see a pretty good follow through. So you can see here, you've been here on the sell mode. We finally put in a little bit of low. You can kind of see that we've got an exaggeration here. We get an inverted hammer. You can see that right here. We see the market rebound. So then we finally flip to buy mode, and that only lasts for a short amount of time, and we flip back in here to sell mode. Generally, when you see something like that, that generally means that the next move is going to be more extensive. And the reason that is because anybody who got long, as we got here, are now stuck. And so those people are going to flip, and you can see how quickly, dramatically, you see this bar, how quickly it went down. And anybody who did get long and doesn't want to get out, they end up having to get pushed even further. You see what I'm saying? Because now after we got, and I wouldn't necessarily say it's a fake out, but in a way, then those people are saying, no, I'm not coming back in again. You're not going to fool me again. So then the market really has to move much lower to find value, and you see where that happens. And then when the market gets very oversold, like we do now, then you can look for any opportunity for the market to generate a buy signal, and generally that will stick. You see that? One of the things that it helped me yesterday, I told you, was that when we were trading at 31.05, was it right in here? It was yesterday afternoon. We saw the market dip to 31 even, and then it hit the stops and dipped down to like it was 30.95. And one of the things that kept me from chasing that was because when I saw that happen, I said, well, wait a minute, we're still in a buy mode in the 30-minute. I don't see a brand new move developing. I think it's just something that they were able to push it and gun the stops. And certainly that we came right back. I think maybe it was this move, I'm not sure. We came right back and then came right back. It's not like we took off, but we came back and then we kept this move moving. But now here we are. We've moved higher. So I'm glad I didn't chase down there. But no, it's just those are the variables, being the 9 and the 27, that I go on and use for myself. But anyway, though, we're going to move on now to the analysis. A good question. Oh, and you were asking about the the options question. Bear with me a moment. Yeah, I'll go back to that. We'll flip back. I've posted this multiple times. Let me go back here. Bear with me. Oh. Okay, there we go. So you can see here, I saved this from last week. June 19th, we're looking at 2.1 trillion of six S&P index, cash index options, and futures expiration. One of the largest monthly exits of the year, non-quarter end. So when you look at that, you think, well, boy, that's a lot. And it is. I'm just saying it's not even a quarter end, and it says one of the largest we've had since who knows when. Well, getting back, let's take a look at the S&Ps. What has been the general direction for these S&Ps? Well, there's no doubt in the longer run, it's been like way up here in the stratosphere. Now, recently, we saw this down move. And then right back up in your grill. So the take, and that has been my concern, was that this move, when everybody thought, oh, this is really going to, this isn't even the big move like from way back when, but we saw this move down here. We turned around, we rebounded right back again. And my thinking would be is you have options that what has been the overall prevailing move has been much higher. This is just from April. We could go on and back this to, let's say, to March when we had the lows. So there's probably some people who may be stuck. You see what I'm saying? So you think that the potential for this to move, we could probably still see a move back up in here, like potentially to the 3140s, maybe even higher. But I'm thinking is that nobody wants to stand in the way of this. So that's why I think we're much higher as opposed to, remember, we were just a couple of days ago, we had really had a pretty good little slide here, or actually just a few days ago, we had a pretty good little slide, and correspondingly, we fell back only a couple of days back. But the market has snapped right back here. So the risk is what's been the prevailing trend to the upside. So these options, if the market can hold here, then anyone that may be long from this area or this area, they're going to get paid if they can hold the market up in here. And I don't think anyone wants to step in front of it, of all those options. They're going to say, you know what, I'll keep my hands in my pocket until that transpires. So that's why the risk is, and I was stating yesterday, the risk is that we continue to move higher. How much higher, we'll find out, but we could maybe see something kind of a little bit nutty, maybe, as we could end up jumping a little bit in the U.S. equity session. Those options expire, and then next week we can probably start to move lower, because we won't have something, I don't want to call it artificial, but we won't be basically having the gun to the market's head. But it doesn't mean that as you were saying, it doesn't mean, oh, if it's options, it means it's a buy, it means it's a sell. What I like to look is what's the prevailing trend, and what you always like to look in the SPOOs, in particular, who's trapped. That's the way it works in futures. Who's trapped? So a lot of people were looking for some big down moves, and we thought we had one just not that long ago. Even one a couple of days ago, we took a little bit of a slide, and the market bounced back. So anybody who owns these options, if you're a seller, you're like, oh man, I thought we were going to break lower. What the heck? So once again, that ends up being, if there's some options, let's say I'm just using an example, just a simple example. Let's say there's an option here at 3,100, and there was an option at 3,125 and 3,150. Well, if you're short the options and you sold those calls, then you're going to have to buy the futures from a bigger standpoint. You'd probably have to, if you were a bank or a fund, you'd have to go in and buy the futures to hedge those, because now if you get exercised and those options expire, let's say they would expire here at 31, just use an example, 3180, then the ones that you sold at 3100, 3150, 3125, you're in the hole. I mean, you got paid premium, but now you're stuck. So quite often what will happen is, in a situation like that, they will step in and buy the futures to help offset that. And so once again, like I said, there's a potential that we could push even higher. And because the value of those options is so great, that's why people are kind of stepping aside, even though, like I said, we've seen the infections and the market hasn't responded of recent, but now we're seeing those infections continue to grow and grow. And there's a concern that, hey, you know what, looks like the economy, maybe they're not going to officially shut it down, but now it's going to slow things down. So there's a potential that we could work lower. So you're thinking, why not hasn't it? Well, we've got all those options expiring, and the potential is that we can still make another run back up here. I think it'll will in turn run out of gas, but no one's standing in the way, because no one's sure how far it could push higher. Maybe we see a quick run up in the morning to 3140, 3150, and then starting next week, we start in a gentle slide. So, I mean, I hope that kind of answers that. Might be a little bit too wordy. Let's go and move back into the analysis. Exactly. Yeah, and well, the reason is, you say, got it. It's who's trapped and what's the prevailing trend. Yes, when you're looking at the options being that big, you see what I'm saying? When you're looking at that value in options, yes, you have to say, if it was just a regular, I won't say regular, but regular standard, whatever you want to call it, options thing, then yeah, it'd be a little bit whatever. But probably the concerns that we've seen with these infections, because you've seen it dip pretty good the last couple of days. Yesterday didn't as much, but on the Texas news and California news, we took a pretty good whack. Felt like about 25 handles in quick order 2 days ago. And then, yesterday we didn't fall as much, but I guess I should say, for 3 days prior, we had a pretty good fall. Then we fell again. Yesterday we didn't slide as much. But once again, like I said, there's a potential that the market will eventually now start to come back in, and then the market's beginning to look tired. But that being said, because of the value of those options and what's been the prevailing trend, it's a matter, to a certain extent, of who's stuck. And you'll see futures, the S&Ps lots of times trade that way intraday, when all of a sudden, like, wow, it's just not sliding back, it's not giving back. Then those that are day traders will probably be forced to cover it, so the market gets an underlying bid tone, and you see the market keep working higher as the day goes on, as we go in towards a close. So anyway, I hope that helps explain it. But anyway, let's go and move on to the analysis. So looking at the euro, we've seen the euro continue just to ease back a little bit further. Uh, Yesterday we had our bias chart support for 1191 and the low was 1184, so it wasn't too far off, but there's still the potential we can work a little bit lower, and the dollar continues to remain on the bid even though S&Ps or indices are still higher. I think the market is looking, once again, as we covered in the news, is looking at the overall potential for or the overall concern with the and potential for these uptick in coronavirus infections. So, although I think we could end up sliding in the indices, we haven't yet. But I think the dollar or the FX market is looking at that overall, not worrying about no options plays or anything like that. We're seeing that. So I think that we will, in turn, move lower. I don't know if we'll do it today, but this is of significant value here, which is, you can see this, see that 1170, 71, see here, pretty significant value. So we're going to use that as our bias chart support today. The upside, you see the high from 2 days ago, that's 1296. I don't think we're going to make it there, but we can look at a quick 2 hour. We'll just go with the high right there, because this high, usually I go with the touches, but you can see some body touches right here. So that'll correspond with the high. So we'll just say is that the resistance would be, and the body close up in there, 1263. And let's go move into the cable. Well, cable has continued to pair back here. Yesterday we had bias chart support at 24.21. We actually came here and challenged at 24 even. You can see right there. Uh, and as we covered in the news, the threat was the impact of the coronavirus, even though they've done trying to think with the QE, which actually was supposed to be negative. Now it's almost like a double negative, because now they're thinking it may not be enough. So it's like darned if you do, darned if you don't. So it's just kept this thing weaker and really opened the door for us. Let's go and take a look at this on a weekly. See that level right there? And close. That's 2361. So that's what we're going to go with, 2361. I'm not saying we're going to get there today, but I'm just saying is if you're long, that's your risk, 2361. And that just provides some demand there. On the upside, see the low from 2 days ago, 2509. That corresponds with this close here. You see that? 2509. Bit of a stretch here. We can take a quick look on the 2 hour. It seems a long ways to try and get there. That's basically what it is. I mean, you can move it down to as low as here, 24. Let's call that 2489. Really, this is where the real value comes in. Call 2496. Still, technically, still been bullish. It's teetering now, but if we break lower, starting next week, we can flip it to bearish. But it's technically still bullish. Let's go move in now to the Aussie dollar. Well, we're still holding up in here in Aussie, and you can see here. Look at this tight range. Look at this, tight as a doggone drum. No changes here. 68.02, 69.30. No changes here in the Aussie. Probably the same thing as a Kiwi. We're just not moving. Look at that. Boy, this thing is holding up like a rock. So no changes here in the Kiwi. We're going to move on into the dollar CAD. Well, the dollar CAD, we talked about this 2 days ago, that it had defended this 35 area here on these 2 days. And we worked a little bit higher. The door was open for us to push higher. And we're just trading in a very, very tight range. We had 36.70. And we didn't trade, go overboard or anything like that. And still trading very, very tight. Although I think the potential is to 36.70. We may not get there. I mean, if you were trying to day trade this, I don't think this. At times, it can be a decent little market, but not really like for per se a true day trading market whatsoever. But up in here, you'd be looking at 36.32, but it's just too tight of a range. So I'm going to stick with this 36.70 on the downside, 35.42. So no changes here for the dollar CAD. Let's move into the peso. We have seen the peso go and move higher here. Yesterday we had our resistance at 22.60, and you can see here we made a pretty good run here. We actually pressed up all the way up to 22.85. You can see here we've been really quiet, and then made this push up in here. The resistance would actually be just this bar right here. We should see pretty good resistance if we were to make it up there, which is going to be right there. You see that? And that confluence is right in here. Should provide some pretty good resistance, which is going to be 22.94. And on the support side, right there, you can see that. And probably even right here, really with this close here and this close here and this open here, would be right there, 22.31. We'll move into the dollar yen. Well, no changes. We've gone from one area where we're trading tight to the next 2 days, which we're trading tight, including today. No changes here. It's just going to be 660 on the downside, 736 on the upside, and we're just stuck in the mud. We're not doing anything here. And let's go into the cash index. We've pushed a little bit higher, and once again, just like the others, I see no changes. We had upside resistance at 97.64. The high was 97.58. No changes. Keep it at 97.64. The downside, we'll pick that up a little bit here, is going to be right there, 97.02. Let's call it 97.03. And with that, we're going to move into the cross rates. We've seen this market continue just to gently slide lower, and now we're just trading in such a tight range here. We had 68.51, and the low for the day so far has been 68.49. And the only thing we'll do is we will move it down to this level. That's all, which is 68.40. So. And resistance is going to be that close in. I don't think we're going to get anywhere close to it, though, which would be 69.50. Well, we've got 69.47. We'll leave it right there. Moving on to the euro yen. So we're hugging the line here. Major line, 1974. We've got 1975. That's going to hold. I'm not saying it's going to hold, but I'm saying it's going to hold it as far as our bias chart support. I mean, definitely got demand, but I'm just stating this. That's why it's such a, I have it marked in pink, because it's going to stand out. If I was looking, thinking, well, where's support, resistance? I see it coming right across. Go, wow, good value. So you can see that's where when they were falling, that was their target. This 1975, they got there. They overshot it just a little bit, came right back up. Today they've tested it, holding right there. Resistance is going to be the touches here. So right there, this bar, that way we can get back here. So this would be 2035. Going to the euro odd. No changes here. This thing is just absolutely dead in the water. Look at that. No changes here in the euro odd. Just completely dead in the water. On to the euro kiwi. Everything's trading really tight, and I guess because you said the indices they're not really moving. Towards the end of the week, no, I don't think anyone's going to necessarily be trying to press anything unless we see a big move in the indices, which is possible. But we're just sitting here. So no changes here in the euro kiwi either. We're just not moving. We did have 74.31, and actually we had actually pressed even lower than that yesterday. We got to 73.64. We can move this just a little bit lower and go. We defended that. You see the high here? At least a little bit of touch there. So 73.77. But we're just trading so quiet. I mean, we have pressed a little bit lower, but we're just not, the bottom's not falling out whatsoever. We can move this a little bit lower just to go with the close here, which would be 75.65. And onto the Aussie. Well, they did get down here to the 72.95. We had yesterday 72.98. only because it's the end of the week. We could see if they can press the lows a little bit further. So we're going to give it 72.65, and only because it's the end of the week. I mean, this will miss the bottom by what, 3 pips, but it's the end of the week. We'll see if we can, if they do press it a little bit lower, if we see indices come off. On the upside, it's going to be the close of this bar, which is, well, we did have it 74.27, no change there. And then on to the guppy. We had 32.52, and remember we went with the level, and there it is, 32.52. The low yesterday was, looks like 32.36, and then we closed at 32.86. So this is, what does he say, close enough for government work. It's holding. It's already had a pretty good fall. I don't know about that. I just don't know. Once again, because it's the end of the week. If we do see a slide in indices, we could see the yen strengthen a bit. Just to be on the safe side, we're going to go with 32.08. We could see some follow through. And the upside is going to be this bar right there, 33.46. Call that 33.50. And on to the sterling nod to close out. Well, we're just hugging the lows. We're right there, 80.89. You see that? We can see some people trying to skedaddle out of their longs because of the weekend. So let's push this just a little bit. You see this low here, right there? That offer some touches across the board, which would be 80.20, 80.32. So we've got 80.32. Upside, right there, 82.09. And that does it. And right now in the spoos, we're actually at 31.19. So we're still keeping that upside bid going. And that's it. And we'll see you in the chat room. And thanks for joining us here on the European crossover webinar.